Is now the right time to buy or sell? Dive into how bond markets and interest rates dictate your next move in real estate. What every veteran or homeowner must know. Good morning and welcome to Building Connections Doral Talks. I'm Betty Gonzalez, your host, and today I want to talk to you guys about the introduction to the bond market and real estate dynamics, the current market anomalies and investment timing, the overview of the current interest rates, and the strategic advice that I personally have for you if you're a buyer or a seller. So let us dive right in. Again, thank you for tuning in today. Now, but before we start, I just want to say, I want to just talk about the strategy that happened in the Dominican Republic. That is where I was born. And it is really, really sad to know that so many people lost their lives and the loved ones are still looking for their missing. So I just want to send a prayer for those who pray, or just saying the right vibe, the vibrations, because anything positive, we are energy and good energy transfer. So anyway, I just wanted to say that, and very sorry for what's happening. My heart is sad, and my soul is there with everyone in the Dominican Republic, with my brothers and sisters. So now let's start and talk about what you came here for. Let's talk about how the 10 yield correlates with the real estate market, okay? I know that a lot of times if we're talking about how we're going to invest, we might think that has nothing to do when we buy and sell, that's not had nothing to do with what happened in the stock market. And I'm not an economist. I'm just gonna tell you what I know and what I understand, how one thing affect the other. Now, the 10-year Treasury yield is essential to the interest rates the U.S. government pays to borrow money for a decade. That's why it's called a 10-year bond. This yield is set to the Treasury auctions and affects various economic sectors, including the housing market. So that's why I want to say, so how does the housing market link to the 10-year Treasury or the mortgage rates? Well, the reason being is because mortgage rates often move in tandem with the 10-year Treasury yields because they're both long-term investments, and investors compare the return on the Treasury notes with their investment options like mortgage-backed securities, which MBS, if you ever hear MBS, is the mortgage-backed securities, which when the Treasury yields rise and when it goes up, so do mortgage rates. And lenders need to tend to make adjustment and attractive to investors compared to the relatively safer of the Treasury. Now, how do you know how the economic indicators and their impact? Let me see how I'm gonna say this. So when the 10-year Treasury yield reflects the broader economic expectations. For instance, if investors anticipate the economic growth and they might demand higher yields for locking their money away, like for the 10 years, right? Because it's a 10-year Treasury, which in turn pushes up mortgage rates. And conversely, if the economic outlook is poor, then yields tend to drop, leading to lower mortgage rates. Now, how does that inverse relationship between the bond prices and yield affect the mortgage? Well, the fundamental of economics and principles at the play the bond rises. This is a lot. I don't like talking about this stuff because I'm not an expert, but I'm just want to tell you. When demand for the 10-year Treasury bonds increases, often due to their perceived safety in uncertain times, then their prices go up, but yields go down. Then this leads to a lower mortgage rate as the yield on bonds sets to the benchmark of other credits, including home loans. Now, while this historically, it's a strong correlation between the Treasury yield and the mortgage rate, the market can behave unpredictably due to the various factors like Federal Reserve policies, geopolitical tensions, and sudden economic shift, including the tariffs, okay? So right now, there's so much uncertainty that whatever we think is normal is not normal. The market is not behaving normally. And this is kind of like what I want to say, because it's really bothering me listening, and I'm watching other agents, real estate agents just like me, go on social media and tell everybody that they need to go and buy real estate because the Treasury yield it's fluctuating, it's going down, so the mortgage rate is going down. And while this is true historically, this happened, nothing right now it's normal historically. Nothing like this happened before. Yes, we had tariffs before, we have all of this, but things happen like incrementally, slowly. But the way that this is happening now is like all of a sudden, really fast, and things are changing. Investors don't know how to behave, and the market don't know how to react. So what does that do? It creates sentiment among consumers and uncertainty, and they don't feel comfortable about investing in anything, including in their own properties. Now, what I want to say about you is that I have cautious that if you just think to invest on any properties or anything like that, I don't advertise it. I don't advise it. Now, if you are an investor and you are certain about what you're doing and you have experience, of course, more power to you. But if you're a new person and you're trying to learn something, this is not the time to do it. I stay away from that. Now, if you are already in the process of purchasing a house, if you have a steady income, if you have a steady job, and you know there's not going to be any uncertainty about your current situation financially, then yes, go ahead, buy a property. However, just be in the know. If you're a person that's trying to sell, if you're trying to sell within the next year or so, be aware of what's happening nationally, but most importantly, what's happening locally. Like right now, for example, I host open houses right here in Doral every weekend, and I see how the people that are coming by, what they're saying, and how hesitant they are, even though they're on the market and they're pre-approved, and even though they come with all the agents and whatnot, they're still taking a little longer, and they're very reserved on how they're going to put offers and if they're going to put offers, because every day changes and it affects people's emotional reactions and their own decisions. Now, let me see. This is what I want to talk to my veterans. If you're a buyer and you're a veteran, you have an advantage. Whether you're active duty, if you're active duty, you have a steady income and you have a safety net. So if you're looking to buy and you're stationed right here in Florida and anywhere in Florida, this is the perfect time for you to buy. Why is this? Because I'm going to tell you what it's the best things for you to buy. The best things for you to buy right now, the best products for you to buy right now, it's going to be in your favor. It's going to be brand new construction properties. Look everywhere that you're at and trying to find new construction properties. Sometimes it's really difficult. Get with an agent. You always want to be represented. Let me explain. The person sitting on those brand new construction, on those offices, they represent the seller, i.e. the builder. So the first thing, you need to make sure that you find an agent that you trust and that understand the process of buying new construction, first of all, and so that they can go there and represent you and guide you way even before you go in there. Once you go in there, what they're going to tell you is what kind of things you want and how is their process, but you would like to know some things prior to going there. I'm not going to go into details on this video, but what I do want to say is the reason this is the best product for you right now. I cannot speak for any other state, but I'm going to tell you in Florida, we have more inventory than like the last 4 years on new construction homes. So what happens? How does that benefit you? Okay, you first of all don't have to pay a down payment. That's the first thing. And because they do high volume on people buying houses, then they understand the VA loan, where a lot of resales don't understand it and sometimes don't accept the offer. New construction understand the VA loan, and they know that it's the best loan out there for anyone that qualifies for it. It's the best loan there is. Now, why is the other reason why? Because they're paying all of your closing costs. Not all of the new builds are the same. So depending on the company that's building it, if it's a smaller construction company, if it's a bigger, if it's a national one, or if it's a local one, I'm telling you, they're going to work with you to make sure that you close. Let's say that you don't have any savings. You don't have anything but a check coming in every month and you're paying $3,500 or more on your rent. My friend, you are throwing your money, your good-earned money away. So they're going to help you with your closing costs, and a lot of them are even buying down the rates to where you can even buy a 3.44 APR interest rate. I'm telling you, this is where I know this because they send me all of the information. So the agents, we know. So you don't want to go to a builder. Let me tell you, one builder is going to show you just one kind of property, and they're going to have their own incentives and whatnot. we get emails and we get all of the rates and all of the incentives sent to us on the daily basis by different builders. So you want to find an agent that's doing this every day and understand, because then they can guide you based on your needs and wants and where you're stationed or where you're located at, and tell you where these properties are, because a lot of times they're not on the MLS and a lot of times they're not even come on because they're not built yet. Now, where do you find the best deals? On properties that have already been built and not sold yet. They were already built it, hoping that somebody will buy it, or somebody was building it and decided not to close for whatever reason. Now they want to get rid of this inventory. Okay, they call them inventory homes. I'm telling you, if you have any curiosity whatsoever, contact me or contact somebody that you trust in your area and let me know. Also, so that you know, even though I am stationed in South Florida, I have agents all over Florida through the military connections, through my brokerage, through EXP. We have Military Connect. We refer people to the places where I know they can serve you best. So it doesn't matter where you're in Florida. So if you are a person that have a regular job, or even you retire like myself, I have a steady income through my retirement. So I qualify to buy a property whether I have a job or not. So you're in the perfect situation, in the perfect storm, where we have a lot of inventory. You don't have to put a down payment, and they're offering you closing costs, and a lot of them are offering to buy down the rate. This is the perfect timing for you, especially if you're paying $3,500 or more on your rent. Anyway, enough of that. Let me know if you have any questions. I'm glad to answer for you. Now, what else I wanted to cover? I said I was going to cover the market. Oh, let me show you the interest rates. Let me share the screen with you. So let me see. I want to tell you what the interest rates are doing today. I think I'm showing the right screen here. You said today's mortgage rate. So that 30-year fixed mortgage rate is at 6.95% today. And look at this. Look at the 15-year fixed mortgage. It's at 6.37%. And then look at the FHA and the VA. They're almost right up there, 6.45% and 4.2% on a fixed mortgage rate, which is almost right here at the on par with 15-year rate. So let me see. I think that's all I wanted to show you for the mortgage rate. There's so much to cover, but I don't want to make the video too long. So if you have any questions, feel free to contact me like always. Again, guys, I'm not going to hold you hostage. All I wanted to do is let you know that a lot of agents are telling you to go out there and just buy because the yields are going down and just don't listen to the noise. Just make sure that you are well educated and understand what's going on in the market. You can follow me, or you can follow anyone else that you trust. But please stay informed if you're a buyer or a seller. If you are a VA entitled person, just know. If you don't know if you're entitled or not, just contact an agent. First of all, make sure this agent understands the VA loan. Trust me, 95% of agents out there do not understand it, don't know about it, don't care to find out, and just going to sway you to find another loan. If they do that to you, do an about face and run, buddy. Just run, okay? Find somebody that can guide you through the right process so that they can tell you what you need for your situation. Anyway, guys, thank you for tuning in. Thank you for tuning into Building Connections Without Talks. I'm your host, Gonzalez. I see you again next week. Have a great day and have a great weekend. Bye. Real quick, calling all Doral professionals, entrepreneurs, and community influencers. Are you ready to showcase your business, share your knowledge and experience with our engaged audience? Building Connections Doral Talks invites you to become a guest speaker on our podcast. Share your unique perspectives and inspiring stories with our listeners. We believe in the power of your voice in shaping that conversations right here in Doral. Click the link below to submit your information and be part of our next episode. Join us in building connections, sharing knowledge, and growing together. Don't miss this opportunity to be a featured guest on Building Connections Doral Talks. Tune in, connect, share, and grow together with Building Connections Doral Talks, reshaping the way we engage with the diverse voices of Doral, one guest at a time. Doral Talks, your voice, our community. Click the link now on the show notes, the screen, or in the comments below, or just scan the QR code to submit your information as a guest. I hope to see you soon. See you in the next podcast. Bye.